Officials at the Department of Labor say that the payrolls increased by 252,000 from November. That's higher than market forecasts of about 240,000. The unemployment rate was 5.6% last month, down 0.2 percentage points from the previous month. This is the lowest level since June 2008. Economists are studying the jobs data and trying to work out when the Federal Reserve will raise interest rates. Most expect that announcement around the middle of this year. Some think it will come a little later. Here's the view from Ethan Harris at Bank of America Merrill Lynch Global Research.
This was another very strong jobs report, a little bit more than 250,000 job gain and another drop in the unemployment rate. This continues a solid trend we've had since the beginning of 2014. Payrolls have finally kind of moved into higher gear in the United States. We think this stronger momentum is sustainable. We think that two things have happened in the U.S. economy to give us better job growth. The first is that a lot of the broken sectors of the economy from the 2008-2009 crisis have healed now. So we have a healthy banking industry and a healthy housing market, and that means stronger growth going forward. The other good news is that Washington is no longer a source of shocks to the economy. We no longer have fiscal austerity with tax increases and spending cuts. We no longer have the dramatic battles in Washington that we've had in recent years. So that better backdrop for Washington is good for confidence, that's good for the economy and good for job growth. So we think jobs can continue to grow at above 200,000 pace through 2015. So the Fed, we think, will probably wait until late in the year to hike interest rates. They've got a very tough challenge ahead because while the job market's improving, inflation remains very low, including weak wage growth, as we just saw in the employment report. That's going to slow the Fed down, but we do think that by the end of the year, they'll be ready to hike interest rates. We think they'll, even with low inflation, they'll start to anticipate that the better economy will eventually create the kind of inflation they want to see. So yes, we do think the Fed will wait a bit longer than many in the marketplace think. But we do think before year end we will see the beginning of the Fed rate cycle.